Ivan Boesky, Wall Street's biggest independent speculator, and according to Forbes, one of the richest men in this country.
One of the great things about this nation is that we can seek profit.
Ivan Boesky, he's one of the big boys.
Ivan Boesky, the man. He became the biggest in his profession.
It's often a field that's described in gambling terms, roll of the dice, high stakes, speculators. Are you a gambler?
The biggest crackdown ever in an insider trading case. Ivan Boesky admitted that he had cashed in on insider information, which was not available to the public.
I don't feel like a riverboat gambler, and I hope you don't think I look like one.
Wall Street is in a continuing state of shock as a result of the greatest scandal in its history.
Another fallen mogul with a big ego, Ivan Boesky.
For those who dealt and spoke with Boesky, now a period of anxious waiting.
All over Wall Street, they're practically jumping out windows.
This is like arresting the madam of a brothel and finding her private book of clients.
Ivan Boesky is the money-loving inside trader whose behavior in the 1980s inspired the famous fictional Wall Street character, Gordon Gekko.
Greed, for lack of a better word, is good.
He really did say greed is good, and was applauded at a Berkeley Business School graduation in 1986.
I urge you, as a part of your mission, seek wealth.
In just under 25 years, Boesky went from a college failure serving as a law clerk in Detroit to being the man who almost single-handedly killed the Wall Street boom era of the 1980s. Unlike any other time, the 1980s was the biggest decade in New York's history, and more specifically, Wall Street. It was labeled the decade of greed, and while that's every decade on Wall Street, in the 1980s, the unapologetic pursuit of money became a sacrament. At the apex of his renown, before his spectacular fall, he parlayed a 10-year run of bafflingly prescient stock picks, using his wife's money into finance superstardom with laudatory magazine profiles, a book deal, and lecture invitations from the best business schools. From an early age, Boesky knew he wanted to be rich but struggled to find his way. He was born in 1937 to middle-class Jewish immigrants from Russia. His father was a Detroit restaurateur who owned delicatessens, restaurants, and bars.
Ivan Boesky is in some ways kind of a Great Gatsby character, right? This self-made person, very much invented.
Boesky's origin story was always shrouded in mystery.
Ivan Boesky didn't really want to tell the truth about where he'd come from. And so he often made these hints of mysterious things in his background. Maybe he'd gone to Harvard. Well, no, he actually bought his way into the Harvard Club. But all that's much better to say than I came to New York because I needed a job after bankrupting my family's strip joint.
But in 1962, his luck took a turn. At the age of 25, he married Seema Silberstein, who came from a wealthy real estate family that owned the Beverly Hills Hotel, and everything changed for him. By 1975, Boesky opened a stock brokerage called Ivan F. Boesky & Company with $700,000 in seed money that mostly came from his wife's family. Ivan Boesky was what's known as an arbitrageur.
An arbitrageur, you ask? It is a person such as Boesky who buys up stock and takes a big gamble that prices will rise so that he can sell the stock at a higher price. Of course, if no takeover occurs, an arbitrageur like Boesky could end up losing a bundle.
Relaxed financial regulation under Ronald Reagan opened the door for a flood of corporate mergers and acquisitions in the 1980s, creating a fertile ground for traders like Boesky to make bank. As a result, Boesky became the highest-paid trader on Wall Street in 1985. At the peak of his investment business, Boesky was overseeing an investment fund with over $3 billion in assets, and he had a net worth of more than $200 million, more than $475 million in today's money, and a place on the Forbes 400 list of America's wealthiest people. He typically held positions in 75 to 100 stocks, hoping that the price of one stock would spike as a merger announcement neared.
His specialty in life was betting on deals. When one company was buying another company, whether the deal would close.
I really think it's a highly conservative activity that is often misunderstood. I don't feel like a riverboat gambler, and I hope you don't think I look like one.
No, but I bet you have nerves of steel.
Well, I can't say that, except that one has to be able to withstand a certain amount of pressure.
Boesky maintained a staff of over 100 in his Fifth Avenue office, but some believe that his staff was used as a smokescreen because he made many of his big trades based on inside information that he bargained for. He didn't follow the normal 20% of profits and 2% management fee that most hedge funds follow either. He took home a fat 50% of the profits, and he was not discreet about many of his large positions. Boesky would often buy tens of thousands of shares of a company just a few days before a takeover deal was announced. Boesky was a workaholic. He typically slept less than 3 hours per night and woke up at 4:30 a.m. to work at his office from 7 to 1 a.m. He had a penchant for traveling by helicopter between his brokerage's Manhattan office and his house. He frequently had a phone balanced on each shoulder, while he had 8 people waiting on his 300 phone lines. Boesky might have lived lavishly, but worked like he was in a sweatshop. In one instance, he visited one of the most expensive restaurants in New York at the time and ordered every single entree on the menu, only to barely taste each item. He wasn't shy about advertising his success either, as he was the first arbitrage trader on Wall Street to hire his own public relations firm, as he would gladly promote himself by taking speaking engagements at events across the country and even writing a book called Merger Mania.
Now, his book purported to explain how he did this. We now know, of course, that Merger Mania was just part of the cover story. Nothing in Merger Mania had anything to do with his actual investment decisions.
But as his success grew, so did his greed.
But there's really, I guess at this point, no number that's enough.
What do you think the role of inside information is in the market today?
I have no way of judging that. I think it is a troubling matter and so it's to the interest of those of us in the industry that all such kinds of behaviors be eliminated to the extent possible.
Despite his success, Boesky sought an edge that would help boost his returns. After losing $60 million on a failed deal for Citi's services, a predecessor to Citgo, in 1982.
The big news on Wall Street today was still the big oil merger that didn't go through.
That has to been a huge blow to his ego. To lose, and lose so publicly, and lose so big, has got to be devastating.
He started an insider trading scheme in an effort to save his business and avoid any such debacles going forward. For that purpose, he approached Kidder Peabody investment banker Martin Siegel in 1982 and asked him for insider information. In spite of Siegel's status as a rising star in the world of mergers and acquisitions, he came through, alerting Boesky to a proposed merger between Bendix and Martin Marietta. Boesky cashed in a risk-free profit of $120,000 and later rewarded Siegel with a briefcase full of cash. Siegel later tipped Boesky that he had been hired by Carnation, a food products company that is now a subsidiary of Nestle, to explore a merger. Boesky made millions from that information, and Siegel continued to gather insider information, using illegal tips to ensure that Kidder Peabody's upstart arbitrage division turned a profit. Between 1982 and 1986, Siegel had made Boesky more than $33 million in profit in return for $700,000 in bonuses. And while Boesky became the biggest name in risk arbitrage, another man operating from his office 2,000 miles away has become the most powerful Wall Street titan since J.P. Morgan.
Junk bond king Michael Milken, the financier who has transformed American corporate finance.
Drexel has changed the face of American finance, and this one man did it almost single-handedly.
Mike Milken is only 42 years old, and yet in 1986, Manhattan Inc. magazine said he may have earned over $200 million.
Michael Milken was the head of a high-yield securities at Drexel Burnham Lambert. He was known as the junk bond king. His ruthless tactics made him a self-made billionaire and one of the nation's richest men. In the late 1970s, junk bonds were an afterthought in the securities market. By 1986, at the height of Milken's power, the junk bond market totaled $125 billion. He boasted openly that he would take over blue-chip firms such as IBM. He skimmed money from deals, rerouting valuable warrants meant for clients into trusts that he and his family controlled. Milken was the true power behind Boesky, whose trading profits were inextricably linked to their relationship. And just as Milken controlled the junk bond market, he also controlled Boesky, as Boesky seemed like nothing more than an order taker for him.
If you were Ivan, the most important person in the world, is Michael Milken. The takeover era, none of it happens without Michael Milken. He is the Wizard of Oz that makes it all possible. He creates the sea that Ivan Boesky swims in.
Boesky would typically receive inside information about scheduled buyouts from junk bond traders and takeover artists, and would cut a deal with the informant for a percentage of his profits from his arbitrage trades. Boesky raised over $640 million in debt capital through Milken and Drexel, and used that money to place arbitrage trades, many of which were bets on Drexel's buyout deals.
Milken has raised millions by selling high-interest, high-risk junk bonds to take over companies, including $600 million for a deal involving Ivan Boesky.
As the 80s progressed and deals grew in number and size, fueled by Milken's money machine at Drexel, Boesky's profits skyrocketed along with his social aspirations, until it all came crashing down.
Been a big week on Wall Street. All this week it flirted with the 3,000 mark, but a recovering stock market comes too late to help some former moguls of the 80s. Many of the rich and famous now are not as rich, and some are infamous.
Boesky's game of arbitrage came to an end when federal officials caught up to him after discovering his role in a similar but separate insider trading scheme with Dennis Levine, an investment banker at Drexel Burnham Lambert, from which Boesky made roughly $50 million in profits.
Dennis Levine, a young investment banker, was arrested and charged with insider trading.
Investment banker Dennis Levine collected $12.5 million in illegal profits.
I realize that I've committed very serious crimes, for which I'm very sorry.
Levine has pleaded guilty and will turn over almost all of his estimated wealth.
After the stock markets closed, the SEC announced the biggest crackdown ever in an insider trading case. Ivan Boesky admitted that he had cashed in on insider information which was not available to the public.
Ivan Boesky, the central figure in Wall Street's insider trading scandal, has pleaded guilty to a charge of conspiring to violate securities laws.
Boesky said he would plead guilty and would cooperate with federal authorities in a widening investigation of insider trading, which experts believe could involve other prominent Wall Street figures.
In September of 1986, Boesky secretly struck a deal with the federal investigators, banning him from dealing securities and to help bring down the insider trading network, rocking Wall Street.
Boesky cooperated with federal officials in secretly taping telephone conversations with other Wall Street operators.
Through wiretaps and tape recordings via Boesky, investigators were able to charge 14 individuals in more than 5 major brokerages with securities law violations, with Milken being the biggest name on the list.
People have been shocked by scenes like this. Investment banker Martin Siegel ducking reporters after pleading guilty to insider trading.
I remember when that news struck, it was like all the air went out of the room. He dealt with everyone.
When Boesky surrendered to federal authorities and began describing his crimes, he was clearly terrified of Milken. Yet Boesky could hope to receive a favorable deal from prosecutors only by ratting out Milken. Boesky even agreed to wear a wire when he met with Milken to get the other man to incriminate himself. The session yielded little except an insight into Boesky's rarefied tastes. When an agent offered Boesky an undershirt to help disguise the microphone, his attorney cracked that the arbitrageur broke into a rash if he wore a shirt that cost less than $600.
Paranoia ran rampant. It was like everybody on Wall Street was suddenly thinking, oh my God, did I ever talk to Ivan Boesky? What did I say? What did he say? And of course, there were some people who realized they were in trouble.
Eventually, Boesky agreed to pay the government $100 million, significantly less than his actual illegal gains. To preserve order in the market, regulators let Boesky quietly sell an estimated $1.6 billion in stocks before they announced the charges against him. Some labeled it the best insider trade of Boesky's career. Milken pled guilty to 5 felonies and was sentenced to 10 years in prison and $600 million in restitution. Drexel, which employed thousands, was forced into bankruptcy.
Picture this, Ivan Boesky, jailbird.
In December of 1987, at the age of 50, Ivan Boesky was sentenced to 3 years in prison. He only served 22 months before being released for good behavior. Boesky had provided the federal investigators with so much information on the fraud in the securities industry that he almost single-handedly ended the 1980s boom era.
Mr. Boesky accepts the court's decision. He now must pick up the remnants and try to get on with the business of living a constructive and useful life.
A year ago, hardly anybody outside the financial industry had even heard of Ivan Boesky. Now his name has become symbolic of what federal prosecutors call a systemic disease on Wall Street, a disease they say requires more strong medicine.
Ivan Boesky, who was used to earning perhaps more than $1 million in a single day, will now be paid 11 cents an hour for his work at the prison.